Hello and welcome to India Business Hour. I'm Shireen Bhan. The big story that we're tracking for you this evening. Reliance Industries beats estimates on robust growth in digital services and upstream business. These partially offset a weak contribution from its O2C business, which was hurt by unfavorable global demand-supply dynamics. Jio delivers very strong numbers as average revenue per user jumps a strong 7.4% to over 195 rupees. Subscriber base grows over 4%. HCLTech reports a strong Q2 dollar revenue. Margins beat estimates, but lower other income impacts profit. The company hikes the lower range of its full-year guidance from 3 to 3.5%. D-Mart owner Avenue Supermarts feels the quick commerce heat as earnings missed estimates. Revenue growth slows in the second quarter while margins dip. Leading analysts trim their growth forecast. The stock slips over 8% in trade. Inflation accelerates in September to nearly 5.5%, the highest reading in the last 9 months. Food prices remain stubbornly high at over 9%. With elections looming, Maharashtra government exempts cars and small trucks from toll fee at 5 entry points into Mumbai. The move will add to the state's already worsening financial picture. Fiscal deficit has nearly doubled in the last 4 months. The diplomatic standoff between India and Canada escalates. India withdraws its High Commissioner from Canada and other diplomats after they were named persons of interest by the Canadian authorities as they investigate the murder of Khalistani separatist Hardeep Singh Nijjar. India summons the Canadian High Commissioner to lodge a protest. At least 18 people killed after an Israeli airstrike in northern Lebanon, far from the border. At least 20 people, including children, killed in Gaza after Israel strikes a school sheltering the displaced. This comes a day after 4 Israeli soldiers were killed by a Hezbollah drone strike. Debt-ridden MTNL will not be allowed to shut shop, says government sources. A revival plan is likely to be worked out as the government believes initiating bankruptcy proceedings will not be the right precedent for PSUs. That's an exclusive. India's automotive testing agency is set to seek details from Ola Electric on its warranty claims and service centers. Sources say the agency will probe if Ola has been meeting the commitments amidst rising complaints from customers. That's another exclusive.
AI is going to be applied to technology landscapes. We are actually going to see more jobs. Jobs of the past will go away. Significantly more number of jobs of the future will be created.
Cognizant CEO Ravi Kumar is betting big on artificial intelligence, calls AI an equaliser that will also create more jobs. Upbeat on client spending after closing 17 large deals last year. That's an exclusive. As always, let's start with the market action. Late rally on Dalal Street lifted sentiment after range-bound trade for large parts of the day. The sensex gaining nearly 600 points, inching closer to the 82,000 mark. The Nifty up 163 points, 25,128. Mid-caps up 250 points, 644 points higher there on the Nifty Bank. That's a gain of 1%. So strong moves coming in this Monday as our markets opened for trade. But the big earnings of the day. Reliance Industries coming out with its second quarter numbers, registering a steady performance across all sectors. Our team is standing by to go over the fine print. Sona, let's start with you, the overall numbers and performance.
Well, Shireen, thank you for that. It was a good set. If we talk about the profit number, it has come in better than what the street was working with. O2C business continued to be under pressure because of lower petchem margins and oversupply situation that we've been seeing in the markets as well. The consumer business reported soft revenue growth, but something that was good was the EBITDA growth that this business saw this time around. Jio reported strong numbers supported by tariff hikes, and profits were up 20% as well for this business. Let me take you through the consolidated numbers. Revenues flat at 2.32 lakh crore rupees. EBITDA came in at 39,058 crore rupees. Margins better than estimated at 17%. And profit number, that came in at 16,563 crore rupees. The poll was somewhere around 15,500 crore rupees. For the auto chemicals business, as I said, it was under pressure due to demand-supply situation, something that we've seen across the industry. And that's why the EBITDA was down 24%. Margins came in at 8%. But the oil and gas business did much better than what the street was working with. It has been continuously performing really well. The revenues were down 6% because of lower gas costs. However, the EBITDA increased by 11%, better than what the street was working with. And margins came in at a multi-quarter high of 85%, which compares with 72%. So it's the oil and gas business, the digital business, and the Jio business, which has supported growth this time around. And auto chemicals has done better than the worst expectations that the analyst community had because of industry industry pressures. Additionally, the company has also notified that their first new energy gigafactory is on track to commence production of solar PV modules by the end of this year, and this is something that the street has been looking forward to and could add multiple EPS upgrades for the stock going forward. But overall, it was a steady set from Reliance this time around.
Okay, let me take forward Reliance Jio then, and it's a very strong quarter by Reliance Jio this time, driven by a tariff hike which was about 20% effective 3rd of July, and a scale up in the home and digital services business. So the company's reported a 14.5% revenue growth, stable margins, and a profit jump of 23% on a year-on-year basis. So that's point number one, strong performance in Q2. Secondly, the numbers also seem to suggest that the subsequent quarter is going to be very strong. ARPUs, aided by the tariff hike, have gone up by 7.4%. But the management says that the full impact of that 20% tariff hike will take place in Q2 and Q3. An analyst we spoke to also said that Q3 could be as strong as Q2. Which means that after Q2 being strong, even Q3 is going to be very strong, and the jump in ARPU has been better than what the street was anticipating, now at 195. Thirdly, if you look at the subscriber numbers, the subscriber growth has moderated on a quarter-on-quarter basis, though on a year-on-year basis, it's gone up by 4.2%. So they have lost some subscribers, but it's not had an impact on the company's profitability. So maybe on account of the tariff hike, the churn which took place, they lost some of the low-value subscribers, and that's a positive. And now 5G subscribers now stand at 148 million subscribers. So now almost at that 150 million mark in terms of 5G subscribers. So to sum it all, very strong Q2 for Reliance Jio, and the indications are that Q3, the subsequent quarter, will also be quite good for the telecom business.
Well, for the retail business this time around, the consumers are actually in wait-and-watch mode ahead of the festive season. Remember, the third quarter is the biggest for consumer companies and the retail companies as well. So if you just take a look at the overall revenue, coming in at around 76,000 crores, it's absolutely flat when it compares to the previous year, but this is a 76,000 crore base that you're talking about. What's actually heartening is that despite revenues being absolutely flat, the store footprint being expanded and the new formats that the company's launched, the EBITDA is actually at 5,861 crores, which is largely same as what the company reported same time last year, taking the margins to 7.7%, making it the sixth consecutive quarter of margins being upwards of 7.5%, and at 7.7% is the highest that the company has reported in the retail business itself, as that trend tells you on your screen. The growth overall was impacted by one, weak fashion and lifestyle demand. Secondly, continued focus on streamlining of store operations as the company is now focusing on the operational performance and calibrated approach to B2B businesses to actually go ahead and improve margins. And that's actually something that's visible in their operating performance as well. So if you look at the store expansion as well, they've moderated on that pace only to focus on more efficient store expansion and store performance. So total retail stores stand at around 18,950. This compares with 18,918 at the end of the first quarter. Total retail area has actually come down by about 2 million square feet from 81.3 million square feet. It's come down to around 79.4 million square feet. But this has had no impact on footfalls, and also digital and new commerce account for 17% of sales, similar as 18% in the last quarter. What's most interesting and something that everyone will keep an eye out on going forward is the quick commerce pilot for Reliance has been launched. So with a big success in Reliance Retail, can they go ahead and replicate that in the quick commerce market, which is extremely fast growing? Is something that all of us will keep an eye out on. Back to you.
Yes, we certainly will. Mangalam, Sonal and Reema, many thanks for joining us. It's been a long day for all of you, but thanks very much for taking us through the fine print there. Reliance Industries delivering a steady second quarter. And staying with earnings season, HCLTech reporting a strong set of numbers in Q2 as well, beating street estimates on all parameters. The company's dollar revenue jumped over 2%, while EBIT margin rose to 18.6%. HCLTech revised the lower end of its FY25 guidance in constant currency. It now expects a growth of 3.5 to 5% as against FY24. Take a look.
We won 12 deals from services and 8 deals from software, bringing the total to 20 deals in Q2. Our total booking TCV for Q2 stands at $2.229 billion. Looking ahead, our pipeline continues to grow robustly, demonstrating a strong and well-distributed presence across business segments, verticals, and geographies. GenAI presents a particularly exciting opportunity, growing at a commendable pace.
Well, that's HCLTech and more corporate earnings. Shares of D-Mart owner Avenue Supermart slumping 8% in trade today. This after the company's earnings missed the street estimates. Brokerages have turned bearish on the stock following a weak second quarter performance. The retailer said it can clearly see the impact of online grocery sales on its business in large metro D-Mart stores. Well, inflation now. India's retail inflation hitting its highest level in 9 months. CPI inflation rose to nearly 5.5% in September as against 3.6% in August on the back of costlier food items. Ritu's here with more. Ritu, the RBI had anticipated a number above 5%.
Yes, inflation for the month of September at a 9-month high has come in higher than expected. Reserve Bank of India had factored in a 5% plus kind of a number for September, but at 5.49%, the CPI print has even exceeded the street estimates of 5.22% according to our poll, and this brings the second quarter inflation average to 4.24%, which again is higher than the 4% which RBI had projected for the quarter. Now that is around 20 consecutive quarters of inflation remaining above RBI's target of 4%. Now some of the jump is base effect normalization, but the main culprit unexpectedly is high food prices. Food inflation has been a persistent challenge these past few months, and it rose 9.24% annually compared to 5.66% in August. And within the food basket, vegetable prices rose by a very steep 36% over the previous year. The other pain points were cereals with 6.8% inflation, eggs 6.3%, pulses 9.8%, fruits 7.7%, and so on. Clothing, footwear, housing, light, they were all within the 3% mark, with fuel declining. Now, core inflation, which is headline minus food and fuel, that is also gradually inching up. It was at an 8-month high of 3.5% in September, but that was along expected lines. So a high inflation reading in September and a similarly high 5% plus kind of a number expected in October as well is precisely why we got that hawkish pause from the Reserve Bank of India in October. And for now, the street is divided on when the rate cuts may start, some expecting the window to open in December, others even later.
Ritu, many thanks for joining us. Stubbornly high food prices there weighing on the inflation print. Here's a CNBC TV 18 exclusive. Automotive Research Association of India, the ARAI, plans to seek information from Ola Electric about its warranty claims in service centres. Sources say the agency aims to investigate whether Ola has fulfilled its commitments related to warranty claims and servicing. The EV company made commitments when registering for the FAME scheme, which is, of course, the scheme that the government gives out a subsidy to electric vehicle manufacturers through. The ARAI is also probing whether Ola Electric has sold vehicles below the ex-factory price through discount schemes. Ola has told the Automotive Testing Agency that no vehicles have been sold below the ex-factory price. Remember, the CCPA is already probing Ola Electric on the back of customer complaints. Now, auto majors have received tax notices for not paying compensation cess, which is levied on goods and services tax on sports utility vehicles, SUVs. Sources tell us that the industry is liable to pay about 10,000 crore rupees. These dues pertain to vehicles sold before 2022. Remember, auto companies had met government officials to seek relief. However, the government has maintained that the cess is not a new charge. On to another exclusive tonight. Debt-ridden MTNL will not be allowed to shut shop. Government sources have told CNBC TV 18 that a revival plan is in the works. The stock gained in trade today following that news. Sapna joins us now with more on the beleaguered telecom company's road to revival. Sapna, no closure and no NCLT for MTNL. A revival plan being worked on?
That's right. The indications within the government circles is the fact that MTNL should continue as a going concern. This is what the buzz is within the government circles. And, heading towards NCLT is not the best option. It may not set a good precedent for the other PSUs. So keeping all of this in mind, it's likely that some kind of a revival / rescue package could be in the works. Now, we are aware of the fact that there is a committee of secretaries which has been looking at the MTNL issue in great detail. No lifeline as such has been worked out yet for the beleaguered telecom player. However, the way things are with this kind of messaging that not going to NCLT, not shutting shop, that will not set a good precedent for the other PSUs maybe a revival package may be in the works. So all of this very clearly indicates that the government will try and keep MTNL as a going concern. Having said that, a couple of issues that need to be sorted out very quickly. One is that, maybe in the long run, somewhere around 7 to 8 odd thousand crores is the kind of infusion that may be required, but that's more long term. As of now, the concern is how to get the company back on its feet and what is to be done about the accounts which have been declared NPA. So I think something on those lines may be in the works, but we'll have to wait and watch and see what is it that the government finally decides, short term and long term.
All right, many thanks, Sapna, for joining us. Coming up, 3 international flights from Mumbai disrupted today after bomb scares. Those details coming up for you. You can catch all of CNBC TV 18's news and updates on Facebook, X, Threads, Instagram and JioCinema. Ahead of the assembly elections in Maharashtra, the Chief Minister Eknath Shinde has announced a complete waiver of the toll fee for light motor vehicles at all 5 toll plazas entering Mumbai. The exemption applies to cars, SUVs and small trucks entering into Mumbai from toll booths at Dahisar, Muland, Vashi, Airoli and Teen Hath Naka. It will take effect from midnight tonight. The state government contracts with toll collecting companies set to expire in 2026. Now, the move comes at a time when Maharashtra is already grappling with a high fiscal deficit, but this has not stopped the state government from announcing a slew of schemes and projects in the run-up to the assembly election. Santhya standing by with more on the state's finances. Santhya.
So the Maharashtra government is rapidly clearing projects and announcing welfare schemes just ahead of the elections, despite the state's ongoing cash crunch. Just today, in what is possibly the last cabinet meeting before elections, the state government cleared a toll waiver in Mumbai, second leg of the Pune Metro project and the Daman-Ganga river linking projects. All this is likely to cost the state exchequer 18,000 crore rupees. The ruling coalition, including Eknath Shinde's Shiv Sena, BJP and Ajit Pawar's NCP, are continually introducing schemes designed to secure political gains or provide subsidies despite objections from the state's finance department. First, let's take a look at the key schemes. One of the most prominent is the Ladki Bahin scheme, which will cost the state exchequer 46,000 crore rupees annually. Under the Ladka Bhau Yojana, a program offering internships and stipends to unemployed men, the government will spend 5,600 crore rupees. The provision of free electricity to agricultural pumps will add 14,000 crore rupees to the state's expenditure. These and similar schemes will cost a total of 96,000 crore rupees. The government is also clearing several major infrastructural projects. The Orange Gate Marine Drive Tunnel will cost 9,158 crore rupees. The Thane-Borivali Tunnel, 18,800 crore rupees. And the Thane Circular Metro Rail Project, 12,200 crore rupees. Additionally, the cabinet approved a 20,000 crore rupees cost escalation for the Pune Ring Road project. The state also announced a subsidy of 50 rupees per day for desi cows registered in Gaushalas, costing the government 230 crore rupees. Now, why is this situation worrisome even for a state like Maharashtra? The financial burden of these schemes could destabilize the state's budget and affect its ability to secure new loans. The finance department has repeatedly warned that Maharashtra has already surpassed the fiscal deficit limit of 3% of its gross state domestic product, which stands at 42.7 lakh crore rupees. The fiscal deficit has already reached 2 lakh crore rupees for 2024-25. compared to 1.10 lakh crore rupees in June when the state's budget was presented. This figure has nearly doubled in less than 4 months. According to the Fiscal Policy and Budget Management Act, the state cannot raise more than 3% of its GSDP in debt, which equates to 1.28 lakh crore rupees. The mounting burden from these schemes and projects will make it challenging for the state to manage its fiscal deficit.
Santha, many thanks for joining us. Now, New Delhi has decided to withdraw the Indian High Commissioner along with diplomats and officials from Canada as ties between the two nations have reached a new low. The action comes hours after India issued a strong rebuttal to Canada's allegations that India's High Commissioner, along with other diplomats, were persons of interest in Khalistani activist Nijjar's murder probe. The External Affairs Ministry in a statement said that India has no faith in the current Canadian government's commitment to ensure the security of their diplomats. Earlier in the day, India had slammed Canadian government's observations linking Indian diplomats to the murder of Hardeep Singh Nijjar. The Indian government called the allegations preposterous, and the imputations it asserted that India reserves the right to take further steps in response to the Trudeau government's support for extremism, violence and separatism against India.
Canada has provided credible, irrefutable evidence of ties between agents of the government of India and a murder of a Canadian citizen on Canadian soil. Now it is time for India to live up to what it said it would do and look into those allegations.
That is the Australian Charge d'Affaires being summoned by the Indian government. India's External Affairs Minister S. Jaishankar is expected to arrive in Pakistan tomorrow for the Shanghai Cooperation Organization Summit. This visit will be the first by an Indian foreign minister in almost a decade. Reports say Jaishankar may join a welcome dinner hosted by Pakistan's Prime Minister Shehbaz Sharif. However, Minister Jaishankar has ruled out bilateral talks with Pakistan during his visit. Well, one of our newsmakers tonight, Cognizant CEO Ravi Kumar, is betting big on artificial intelligence. Speaking with me, Kumar said that AI will be an equaliser that will create more jobs for the future. He's also upbeat on client spending after closing 17 large deals last year.
I had broadly set up 3 goals. One, to simplify our operations. So we've done an extremely good job of simplifying it. The second is to create commercial momentum. And over the last 18 to 20 months, we've created some amazing commercial momentum with large deals. Last year, we closed 17 large deals, more than $100 million. And for the first half of this year, till Q2, we closed 13 of them. So we're in a good spot there. We've got our clients back. The mojo of the company is back in the market. I've been a strong believer on the other side. I've been optimistic that as AI is going to be applied to technology landscapes, we are actually going to see more jobs. Jobs of the past will go away. Significantly more number of jobs of the future will be created. The gap within an occupation and the gap between occupations is going to shrink. Entry barriers to good jobs is actually going to go away. AI is going to be an equalizer.
And staying with artificial intelligence, it has become more than just a buzzword. It's become an area of serious resource allocation, from manpower to man-hours to mammoth war chest. Recently, Google and NVIDIA have committed to doubling down on their AI investments in India. But CNBC TV 18's Jude Sunnett speaks to some of the stakeholders in India's AI revolution and reports that India's talent pool may take a while to be AI ready.
What we'd like to do this time with AI is make sure, both in terms of discovering new interventions for nutrition or vaccines or drugs, and helping give people health advice.
AI is going to change everything. From every sector to every country, there will be applications that will completely change how we do things today.
We believe agent AI, agentic AI, is the most important technology in the enterprise and in the business world. In contrast to chatbots and co-pilots where they simply assist you, we now have AI agents that can work with you and take action on your behalf.
Everyone's talking about AI, and expectations from India are high when it comes to fueling and accelerating this revolution. So is the money flowing into ramping up India's AI capabilities.
Talking about India is going to completely leapfrog some of the things that US and Europe have been doing in technology side of these industries for a long time. Take healthcare, defense, manufacturing, right? India has not been touched by technology too much in these sectors. And I think what AI has shown and what it can do, I think will completely leapfrog, I think, rest of the world, and will be able to build real applications for billions of people in India.
Even Google's Sundar Pichai and NVIDIA's Jensen Huang have accepted the invitation to India's AI party. But the big challenge, experts say, may not be money or technology, but a talent pool that can slingshot the AI movement to the next level. A report by NASSCOM says India's AI talent pool is projected to grow from present-day numbers of between 600,000 to 650,000 to over 1.25 million by 2027. While this is a growth rate of 15% CAGR, it still isn't as rapid as India's AI market growth, which is projected to grow at 25 to 35% in this period.
We really need to make sure that we come together as teams, be it from the industry, academia and the government, to make sure that our talent that comes out of universities have the right level of knowledge so that they can come in and really work on those real-life problems.
The Indian government acknowledges this. Budget 2024 allocated 2,550 crore rupees to set up 3 AI centers of excellence to ensure India is part of the global AI discourse. Further, the National AI Mission and National Supercomputing Mission have been designed to create a skilled AI-ready workforce. The private sector is also chipping in. For instance, SAP Labs India has doubled its AI talent pool as it deploys its AI co-pilot Joule across its talent base. And Zoho Corp is intensively skilling its talent in the area of AI language models.
I always have believed that it's a job of entrepreneurs, it's a job of companies to create those skills. Not just say that we want somehow ready-made skills from the market, but go and actively invest in skill, talent creation, talent nurturing, all of that. That's what we do. Same thing we do in AI too.
The urgency is palpable. India is home to more than 100 Gen AI startups, and the number is growing by the week. There's no stopping global tech majors from investing big in India's AI potential. Just last week, Cisco announced a $1 billion global AI fund, even as Chairman and CEO Chuck Robbins acknowledged the country's startup boom. All that's left now is for India's widely available human capital to get more AI ready. After all, our AI story may have only just begun. In Chennai, this is Jude Sanath.
Well, onto the aviation space. Aircraft lessor Aviator ML has filed an insolvency plea against SpiceJet in the NCLT. The lessor claims that the airline owed 59 crore rupees related to a lease agreement for Boeing 737 aircraft. However, the tribunal refused to issue a notice to the airline as it is yet to respond to the lessor's demand notice. NCLT will hear the matter again on the 11th of November. Now, 3 international flights departing from Mumbai were disrupted today due to a bomb scare. Air India flight from Mumbai to New York was diverted to Delhi after a bomb threat. Air India has said the flight will now depart for New York tomorrow, and passengers will be provided overnight accommodation in Delhi. Meanwhile, 2 Indigo flights flying from Mumbai to Muscat and Jeddah also received bomb threats, causing disruptions for hundreds of passengers. Madiha is here with more on what an airline has to go through, not just in terms of cost, but also intangibles. Of course, the inconvenience to passengers in the event of a bomb scare. Madiha.
Well, since this is directly linked to passenger safety, airline unfortunately cannot take such threats lightly. But at the end of it, they also pay a big price for something that wasn't their fault. Now, every time a flight is taken for security screening, it has a series of things that get impacted. Of course, the passengers face inconvenience and stress. If it is a domestic flight, then all the other routes that the plane was scheduled to operate get affected, impacting several other passengers across the country. Moreover, an airline faces tangible and intangible financial impact. For instance, let's take Air India's Mumbai and New York flight as an example. The flight had departed from Mumbai and then diverted to Delhi. Now it will take off for New York tomorrow. According to people working in airlines, this flight would have had to spend at least 2 additional hours in air. And if the operating cost of the flight is, say, around 12 lakh rupees per hour, then 2 extra hours would mean 24 lakh rupees. This includes charges such as fuel and navigation, crew and catering, among other costs. Then this flight would have had to dump the excess fuel before landing in Delhi, as it would have provisioned for a journey to New York. So that would be dumping 70 to 80 tons of fuel. Now, landing at a foreign airport cannot be pre-planned, so a flight cannot randomly land at any time. The airline will need to secure permissions for landing the flight at a different time. Now, there were around 239 passengers on this flight, and providing hotel accommodation to them would be around 12 lakh rupees if we take a minimal 5,000 rupees per head cost. Since it is an international ultra-long-haul flight, the same crew cannot operate this flight due to their flight duty time limit, so another set of cockpit and cabin crew will have to be arranged to operate the next flight. So that's the cost that is easily calculated. There are other costs like compensating passengers on the same flight and also to those who had booked Air India from New York to Mumbai. And the inconvenience cannot be measured and quantified. Someone could have had a medical appointment, a job interview, or any other emergency. So that's the cost the entire ecosystem pays for a fake bomb threat.
Absolutely, and not to mention the anxiety to those on board and to those on ground waiting for information of their family members and their loved ones. You know, the highest penalty should be awarded to people who go through with something like these fake threats. With that, it is a wrap on this edition of India Business Hour. Thanks very much for watching. The news will continue right here on CNBC TV 18. Stay tuned for more.